I think this whole correction has to be viewed in the context of what has happened not in the last 1 month, but what has happened over the last 3-4 years. Liquidity has been very easy worldwide because of injection of this quantitative easing. Interest rates have been virtually zero. So obviously the risk on trade has been on not for last 1 month, but as I said, for last couple of years. Now market, when you are coming out of this kind of a situation, it is extremely difficult to pinpoint when is it with this black swan kind of event will happen. But given the build-up which had happened in the markets, given where the valuations in general had gone, like people are crying foul about China, it was, looking back, it was only a matter of time when the stocks are trading, the whole market is trading above 100 PE multiple, companies who do not have virtually no fundamentals, have market cap of $1 billion and $2 billion, you can reverse merge anything, create a company out of thin air. And so I think it had to happen. But when it happens, obviously it is very painful for the markets, and the noises are far bigger than what actually sometime the reality is. So I feel all this crying wolf about China is just being made an excuse because of the easy liquidity, because of the build-up of this bull market. Market had to correct. That's what I would say, and that correction is what
but
is.
But Madhu, you saw this one coming. When we interacted, I think in early June at the ASK conference, you said that look, China was set up for a fall.
Yeah.
It was more like a bubble, and you give me example of that Chinese solar company which lost billions of dollars of market cap. Sure. So you saw this problem was coming.
No, see, I had this gut. Ultimately you never know that what is it. It is going to trigger, whether it is going to trigger after 15 days, 30 days. But being in markets for 20 years, one thing we know, Nikunj, that these things can get prolonged, but they cannot vanish. In a sense, ultimately reality has to catch up. So I would say that, what has happened in the last 1 month or so. Let's not even take 3 days. Right? For instance, FI has been selling India for last 4 months. Yes. There's been roughly 25,000 crore rupees of inflow from foreign institutional investors in last 4 months or so. So it is not a last 3-day problem. It was a problem which was building up, but because in bull market this is what happens at the fag end, everyone wants to participate. So maybe I'm not saying that this is the end of the bull market, but around that 8,500, 9,000 Nifty level, people gave up everything and say that just we have to buy now. And it was somewhat even visible even in the Indian market that so many small companies, mid cap, इतना आसान थोड़ी होता है वो every day morning में आओ कुछ भी ले लो और पैसा बन जाएगा इतना आसान.
There was a buying panic.
Yeah, absolutely. There was a buying panic. So I think this correction, as I see, is an extremely good thing for a long-term investor. क्योंकि तेजी के market में then it becomes even difficult to make money. That at that valuation when you buy, your margin of safety is very low. And given now the correction which has happened in individual companies, even in the markets, I would say that a retail investor is again getting a chance.
So this is a deep bull market correction. This is not end of the bull market.
No, doesn't look like. Doesn't look like to me. Absolutely. However, we must recognize that whenever markets correct like this, to expect that V-shaped recovery and everything will be hanky-dory again from next week onward. That again is taking it to the next extreme. So I would say that we must acknowledge that still even at 7,800 Nifty, we are still up 50%, 60% in last 2 years. Individual companies, there has been massive amount of wealth creation in the last 2 years. So if the market even consolidates here for a couple of months, I would not be very surprised that, and eventually as the earning catches up, the gains will come.
So let's say a year from now, 6 quarters from now, markets would be significantly higher from where they are today?
Nikunj, I don't know about the index, but I know about individual companies, they will be significantly higher. Because this is where, at least in India, that much I can see that, people are getting misguided and by seeing the broad indices that it has gained 200 points, it lost 200 points. If you look at the whole composition of Nifty, there is no reason for, let's say, for instance, metal companies to do well in the last 12, 18 months. And they have some weight on the indices. Public sector banks obviously had pressure. They had some weight on the indices. So what I'm trying to say is that when you look at the broad indices, you get a misguided picture. But you go deeper. If you know your companies well, and if these are companies which I called it typically have been bear market survivors for last 4-5 years, who have survived the storm of last 4-5 years, have stuck to their business model, their balance sheet are not fractured beyond repair, and they are managements and companies which are focused on execution. You see the amount of wealth which has got created even in the last 2 years is not funny.
So let's break the world into 2 or 3 large parts. One, it's currently a death knell for commodity producers. Brazil, Russia.
Yeah.
How will the world change now that the wealth effect will move from commodity producers to commodity consumers like India? Because that's the big change which is happening in the world.
It's a big boon for India because we are obviously, apart from oil also, we are one of the largest commodity consumers. And we have to build our infrastructure. We have a massive capex cycle. So, you know, if railways have to spend 8,50,000 crore rupees, you just imagine the amount of steel which is going to be consumed. And steel prices are back to where they were in 2001 and 2. So it is by and large very beneficial for India. However, let me say, you know, one thing which worries me, that if the commodity and the oil prices stays here only, or if it goes down further, then some kind of a blow-off of a country is not ruled out.
Geopolitical crisis.
You know, country as a whole, you know, what can
USSR collapsed in
what can happen to
1980s,
Venezuela, what can happen to you know, Russia, what can happen to Brazil. We don't even know, you know, what. So I think, you know, I would pray as an investor that commodities and especially oil should not fall, because it is very general perception that if oil falls, it is very good for India. Yes, it is good at a point of time, but if it creates global turmoil, then it is not very good for stock markets. So I would hope, you know, somewhere here oil must find a support. And typically, let's say if oil prices rise by $5-10, we should not complain, because that will provide some kind of a resemblance to the world.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.